Hey guys, my name is Courtney Epps, and I'm going to share with you today how to reduce your taxes for business and for individuals. And so we want you to be able to pay less and keep more. So my name is Courtney Epps, and I'll share with you a little bit about my background in just a second. But I want to share with you this seminar is going to show you how to increase your tax deductions and your tax credits while reducing your tax liabilities. Seminar is valuable to businesses and individuals alike. And, will you and everyone you know enjoy keeping more of their money naturally? So the seminar is just going to show you how to do that legally, morally, and ethically. So, like I said, my name is Courtney Epps. I reside in Greenville, South Carolina. I graduated from Coastal Carolina University back in 2002. So I've been in this industry for 15 years now. I worked for a large CPA firm while I was in college and after college, and just decided to go out on my own because I'm an entrepreneur. So I've owned and operated a insurance agency and accounting firm as well in Myrtle Beach, South Carolina, and I had 3,500 clients when I sold that agency about 5.5 years ago. So getting right into it, here's our agenda. Now, I want to go over some myths that we were taught by either our parents or taught by other accountants, CPAs that you need to know about that are impoverishing our country. Commonly overlooked tax deductions and credits, lowering your taxes. Naturally, everyone wants to do that. And I'm going to give you an example of a household income, a second household income, what that looks like and why you should not be seeking another job. The advantages of having a home-based business or a network marketing company, whichever one, it does not really matter. I'll show you some of the differences between the two. Additional reasons to start a home-based business, and what is your CPA says you can't write it off. So if you currently have an accountant and they tell you that you can't write this stuff off, I'm going to share with you where the information is so you can go and read it yourself if you don't believe me. And how to prepare for tax time. How can you save money right now? And what if you get audited? So expert information. I'm going to share with you a book that I actually use to get a lot of this information from. It's called Lower Your Taxes Big Time by Sandy Botkin. And so I'll share with you a little bit about what he actually says in his book. And then a lot of the information that I'm giving you came from this book. So I'm going to get started. To miss and impoverish our country. I didn't make a lot of money this year, so I don't need to know about tax planning. Well, that's just untrue. Actually, the lower amount of money you make, you qualify for more credits. So if you don't know how to do the paperwork or understand what you're doing, you can actually be leaving about $9,000 a year in earned income credit and child tax credit on the table. So you just need to know, you need to understand taxes, or at least have someone who does that you are working with. Now, my home-based business or small business has to have a profit for 3 out of 5 years. I actually thought that for a really long time, even as an accountant, and that's just not true. The IRS just wants you to treat your business as if it is a business and not a hobby. So I'm going to share with you some examples on that, but just think about General Motors and Chrysler Company. They lost money for years and years and years before they ever gained a profit. Microsoft, IBM, they lost money. They are legitimate businesses, and they were able to continue writing off their expenses until they started making money. The same thing here. You have a business, a small business or a home-based business, and you're able to write those things off. My accountant, spouse, or friend takes care of my taxes. That's like saying my doctor takes care of my health. It's just not possible. So, you need to understand your taxes or have someone who's actually tax knowledgeable in order to help you make sure that you're making the best decision with your money. Because it is the greatest expense that we have is taxes. Most people don't realize it, but they're paying about 39% in taxes. So 39% of your paycheck, the minimum that you're paying in taxes is going to be about 28.5%. So that's a huge expense, and you want to be able to have as much benefit from that or be able to offset it as much as possible. So tax knowledge won't save me that much money. Again, just like I said, almost 39% of every tax dollar from most people or every dollar that they're making is going out to pay taxes. So yes, tax knowledge will save you a ton of money. So moving along, commonly overlooked tax deductions and credits. So here's some things that you may not be aware of. State sales tax, you can actually write that off, all your sales tax if you keep your receipts all year long. Out-of-pocket charitable contributions. You've got student loan interest paid by mom or dad. You can write that off. Child care credit and expenses, that's up to $3,000 a year, plus the expenses on top of that for like daycare, things like that. Earned income credit is up to $5,600 a year. That's a huge benefit if you have an earned income credit. The more kids that you have, naturally, earned income credit is higher. Cost related to caring for a parent, elderly care, daycare, assisted living. You can actually write those things off if you're paying for them for a parent. Medical expenses, IRA contributions, your contributions to a health savings account, those can be written off as well, and deductions for being self-employed, which is honestly the highest tax savings you can have. Everything else on this list is helpful, but most of it is only deducted on what's called a Schedule A itemized deductions. So unless you have a massive amount of deductions, you really don't get the benefit from it each year. But deductions for being self-employed, that is the highest tax savings you can possibly get. And regardless of your income, you can take these deductions. So lowering your taxes. So if you're an employee, the taxes deducted from your paycheck are based on your payroll income, right? And if you have a loss from a business, it can actually lower your tax bracket, and it goes dollar for dollar against any income that you have. So it can save you a ton of money. Now, here's an example. I want to explain to you second household income. This illustrates why having more than one job in a family does not create a significant difference in the household income or in most people's bank accounts, simply because of the tax laws. So here's Jane Doe's husband. He makes $40,000 a year, $3,400 a month. When Jane Doe wasn't working, they had more month than money, so they needed some extra money. So she decided to go out and get a job making $20,000 a year. Well, Jane Doe earned a $20,000 salary and only took home about $1,025. And the reason why is because of all the work-related expenses. Yet she could have netted the entire $20,000 had she earned it in a home-based business. This is an increase of 18 times her take-home pay as an employee. So I'm going to show you the results right here. So here's her gross income. She got to pay taxes, state and federal taxes, got to pay Social Security taxes, got to pay car expenses. So you got mileage on the car. You got child care. You got lunches at the job, business clothes, dry cleaning, higher food expenses because, eating out, snack food, all that good stuff because she's not home. So her take home after this is $1,025. So see, here's the thing. If Jane Doe starts a business, she would not be spending dramatically more money than she's currently spending. And the reason why is she may eat out some, she may buy some snack foods and go on some trips, but Jane Doe would still have the same car expenses for repairs, gas, and insurance as she did before. If she had a home-based business, however, many of her expenses can become deductible. So that's the cool part. The fact is that the car expenses, the child care, the lunches, the business clothes, the dry cleaning, the food expenses, higher food expenses, all of those can be tax deductible because you have a home-based business. So the concept is known as redirecting expenses. With a home-based business, she can now deduct some of the expenses she's already incurring, and that just makes a lot more sense. So although she's going to make the same amount of money, her bring home is going to be a lot more money because it's going to help on tax end as well. So other advantages of having a home-based business. You'll never get rich or even maximize your income potential until you learn to get your taxes down to the legal minimum. And that is 100% true. There are two tax systems in this country. One was created for salaried employees, which is a much higher taxes that you have to pay, and one is for small home-based business owners. And naturally, they get massive tax breaks because they're creating new jobs for people. So a home-based business will provide a more strategically beneficial position than just having a second job. And most people think, okay, I need to go out and get a second job because I need more money, but they don't realize that by getting that second job, that it could be potentially putting them in a higher tax bracket, and they could be paying 10% more in taxes than what they were before, which is actually putting them further behind. So traditional job security definitely has declined over the years. It's going to continue to do so, making home-based businesses more attractive. And it's very likely you can save $2,000 to $10,000 per year by starting your own part-time home-based business. And again, a lot of this information was derived from Lower Your Taxes Big Time by Sandy Botkin, who is a CPA, and he's also who's an IRS tax attorney, former attorney. So here's tax-deductible business expenses. So just so you understand what is tax-deductible, and it's here. Any expense that is incurred for the purpose of gaining or producing income and incurred with a reasonable expectation of resulting in future business, and it's reasonable under circumstances. This is IRS code. This is exactly what they say. So if you're attempting to earn an income, then the IRS says it's deductible if it's reasonable. So, redirecting your expenses allows you to take the maximum deductions for expenses that you're incurring anyway. So I have a home-based business. The great thing about my home-based business is when I get my car and I go to see a client, it's tax deductible. The entire mileage is tax deductible, and I'll share with you what expenses look like, what you can write off things. And there are many more, but I'm just going to give you the gist of them. But here's the thing. I already have a home office. This is my home office. So instead of me going out and renting an office, I can actually write off a portion of my home and all the expenses derived from that because I'm working out of my home. You guys see me, I'm here in my home office. So what can you deduct? First thing, home office. To qualify, the area has to be exclusive for business activities. If your kitchen table doubles as a work desk, that's not going to work. However, if you have a dedicated room for an office or even a portion of the room, you can deduct some of your housing costs. So things like utilities, you've got repairs and maintenance, you've got your telephone bill, internet, you've also got insurance and taxes on the house. So those can be written off as a home office deduction. And you may have heard, through other accountants, you may have been really scared that a home office deduction is going to trigger a red flag. Well, here's the thing. The IRS is more likely to audit self-employed who take advantage of it, but here's the percentage. If you're 0.01% likely to be audited anyway, whether you have a home office, everybody is 0.01% likely to be audited. If you have a home-based business and taking a home office deduction, you're 0.03% likely to be audited. So it's minute amount, and the thing is if you truly are operating a home office out of your house, you should be taking the deductions. You should be getting the expenses because it's just not right for you not to be able to. So however, if you're legitimately entitled to the deduction, take it. It can be one of the most significant annual expenses that you have. So here's some other deductions. You've got supplies, so paper, printer, tablets. You buy desk for office furniture, projection screens, computers. All those can be written off. Advertising, such as business cards, print ads, magazines, yellow pages. You've got, and I shared this earlier, the home office deduction. Utilities is based on how big your home office is, how much of a percentage. The internet and telephone, your cell phone, can be written off based on your percentage of business use. Travel. If you attended a conference, do you travel to meet a client? If so, you can deduct these expenses such as lodging. You can deduct the tips. You can deduct your meals up to 50%. If it's a client meeting, you can actually deduct more. And you also have your transportation expense as well. Now, the other thing is auto and commuting. So you can write off your travel to meet a client, perform a job outside the home, purchase business supplies, conduct research, do any kind of activity for your business. You can deduct this as travel for auto and commuting. This includes a standard mileage deduction. 2015 was 57 cents. So, or public transit fares, parking and tolls can be written off as well. So The additional deductions, we've got software. So if you buy a management system software, you buy QuickBooks to keep up with your accounting. You know, any sort of software that you're buying to help, you know, like McAfee to help with viruses. Subscriptions, monthly fees, insurance premiums, retirement contributions, child labor. A lot of people don't realize this. You can actually write up to $6,300 you can give each of your children under the age of 18. You don't have to pay taxes on it, self-employment taxes, you know, FICA, Medicare, and on top of that, they don't have to pay taxes up to $6,300. So that's a good way to not only help your kids get started, they can help you with the business, but they're also getting money that they're not having to pay taxes on, and you're getting the expense from it. Continuing education, training, seminars, fringe benefits if you have employees, including spouses. There's lots of things out there that you can actually write off. And I'm not going to go into detail on that today, but you know, definitely you can contact me and I'll be glad to help you through understanding all of these deductions. And then anything that you spend for your business, like cost of goods sold. So if you have a business that you are buying product and you're selling that product, then that's actually a tax deduction as well. So that would be cost of goods sold. So I'm going to give you a visual. I want you to understand how big of a deal being an employee versus an employee with a business, with a home-based business, and what it can do for you. So here's an income of $50,000. We're going to look on the left side of the employees. You got $50,000 a year, gross income. You get a standard deduction. So if you're single, you get $6,300 a year. If you're married, you get $12,600 a year, regardless. So that's just for living in America, you get that deduction. Now your personal exemption, if you're single, is $4,000. You're married would be $8,000. If you have kids, you get an additional $4,000 per child. So as a personal exemption. So these are standard things that you're going to get regardless. Now, so you've got to pay taxes after that. So the $50,000 minus the $6,300 minus the $4,000 is going to get you to $39,700 if you're single. Well, at that rate, you're going to be paying FICA taxes, which is Social Security and Medicare, and then also state and federal taxes at 39.65%. So you'll be paying $15,741 in taxes, leaving you with a balance to live off of $34,259. And if you're married, you are actually in a little bit lower tax bracket because there's two of you, and you'll have a balance of $41,577. Well, now let's look at living expenses. So, you know, the average person has about $20,000 a year just as a single person in living expenses. So you're talking about rent, mileage, vehicle repairs and maintenance, vehicle payment, cell phone, internet, meals and entertainment, childcare, vacation and travel, etc. Okay, so these are just regular living expenses. Well, let's deduct that. Now you're bringing home, as a single person, about $14,000, and we all know that goes towards groceries, and it's going to go towards all these other things, and most people end up in debt after they get finished with their income minus all their living expenses. They end up in debt. Well, if you're married, $21,577, and we haven't talked about groceries. We haven't talked about the things that cannot be written off on your taxes if you have a business. So let me share with you this. So employees earn income, they pay taxes, and then they purchase necessities. Business owners do it backwards. They earn their income, they purchase their necessities, and then they pay taxes. So here's what it looks like. You create the same $50,000 a year income. You get to subtract the living expenses, now become business expenses, because you're actually using those for your business to increase your income. So the mileage and vehicle repairs, the maintenance, the cell phone, the internet, the meals and entertainment, childcare, the office supplies, all that stuff, business use of your home, vacation, travel, those are now business deductions. So we're taking that $50,000, we're deducting the 20 from that. That leaves us 30 grand. And then from there, we're going to take our standard deduction, we're going to take our personal exemption, and then we're paying taxes as a single person for $19,700, and that's now at a lower tax bracket, 28.65%, and you're paying $5,600 in taxes as opposed to paying $15,000 in taxes. If you're married, you're looking at $9,400. You're in a 20.65% tax bracket. You're looking at $1,941 as opposed to $8,000. So you're bringing home a lot more money, and the difference, you can see it. I mean, just a single is 10 grand, married is about 6,500, and these are just based on, you know, $50,000 a year. So naturally, you know, two people may have an $80,000 a year income. So, you know, as long as you are doing what you're supposed to do and working and attempting to earn an income, these deductions are extremely possible for you. So you want to talk to an accountant about them. You know, I'm not going to come out and tell you that you can write off everything. If you are looking for someone to, you know, ask questions, you need information, I'll be glad to answer those questions for you. But at the end, you'll have my phone number and my email address as well, so you can help understand how this works. Now, here's the thing: how to prepare for tax time. You want to make sure that you have everything that you need. The bank statements are good to have. Credit card statements. There's also a deductor software. I don't know if you guys heard it, and there's one called TaxBot. SandyBot can actually create a TaxBot. So there's two different tax softwares out there that are really simple to use, that you can accumulate all your information in, so you can actually log miles. It is not required by an accountant to have the information for the logging miles, but it is required if you get audited. So you need to make sure you are logging miles every day and listing where you're going. Cash receipts is a big deal. So if you do use cash receipts a lot, they're not required by an accountant to do a tax return, but they are required if you are audited. So there's tax softwares out there that you can actually take pictures and input that data in, and then contact your local tax accountant for answers to your questions. And it doesn't have to be local, but contact someone if you have questions. Now, what if your CPA says you can write these out? Well, here's the thing: find someone else to do your taxes, because they're just incorrect. There are publications out there, and I've listed these, that you can actually read on your own to see all of these expenses that I pulled for you. And there are more expenses than I shared with you. And for a full list, I'll be glad to email that to you. If you shoot me an email, shoot me a text and say, hey, can you please send me the deduction list? I'll be glad to send you what I have compiled that I give to my clients. On top of that, there's something that a CPA abides by, and I just want you to understand. It's called a Circular 230 rule. And this is one of the reasons why I never went down the CPA route, is because I want to work for my client. I don't want to work for the IRS. And this Circular 230 rule states that you cannot be overly aggressive as a CPA with a tax return, or you could actually lose your rights to ever file a tax return again. And that scares a lot of CPAs, and so they are very hesitant to write off the things that are critical in business that you need, that are legitimate expenses, because of that simple fact. So I just want you to keep that open mind. Here's the publications. If you're truly treating your business as a business and their true business expenses, you should write them off. That's what they're there for. Now, if you get audited, to be audit-proof, your business must be treated like a business, not a hobby. So you cannot start a network marketing business or home-based business for sole purpose of having a tax deduction. You just can't. But here's the thing: are you doing the daily or weekly business activities to ensure this? You don't have to work every single day, but you should be working weekly on a business. Do you have a business plan? A lot of auditors are going to want that information. I had a client this year that was audited for 7 solid days. It was an excruciating audit, but we got through it, and actually it was much better than I expected. They gave her every expense that we requested, and so but if you have your stuff together and you have a good accountant who's willing to help you in that audit, you don't have to worry about it. Conduct business in a business-like manner. It's very important. Conduct activities like a similar profitable business. Devote specific hours to your business, and follow the system that you give. So here's the thing. If you are working and attempting to make money, you have nothing to worry about. Just keep track of it. Get a calendar. Get a a yearly calendar. I have mine, and I have in it what I've done. The IRS is very helpful if you have your stuff together. Just make sure to keep your receipts. Make sure to log your miles, and keep it in a safe place. So if you ever get audited, just go back to that year and say, okay, this is all of 2015 or all of 2016, and you've got it right there, so you don't have to worry about it. Now, how can I save money right now? Start a home-based business, immediately. You can also do a couple things. If you have a home-based business, and this is not just home-based business, most people are, if you obtain a refund each year, then you are not properly filling out your W-4, which tells your employer what to deduct as far as taxes go. So you may want to increase your exemptions. You can increase them. Normally I've seen by 2, and you're going to end up with the same refund at the end of the year because you're going to have the expenses to be able to write off, and that offsets your income. You can get back a refund because you're paying too much in taxes. And so, I don't agree with giving the IRS a tax-free loan, which is exactly what you're doing if you get a refund each year. So you make sure you're looking at that W-4 correctly. A lot of people like to just have that money sitting aside, and so when they get their taxes back, they're getting a substantial amount. The thing is if you're hurting yourself daily, weekly, every pay period, and you're short money, then that's a perfect way to help you fix that problem. Now, you can actually have federal taxes not taken out if you had a refund last year. You need to be very cautious with that. Speak to your accountant definitely before you even think about that. So, you can get back an extra $100 a week, and that's a lot of money. That's money you could actually use to start an extra business or to save up. Don't let the government keep your money while you're struggling. That's a big deal. And this money can help people start their own business. So now going into what the experts are saying. So this is the book I told you about, Lower Your Taxes Big Time. I have no affiliation with Sandy Botkin, but it is an amazing book someone shared with me. And so he's got a lot of his former IRS attorney, senior tax law specialist, and he's just got tons of different accolades. He spent 3 years in the tax department at an international accounting firm, 5 years as a legal specialist in the Office of Chief Counsel for the IRS. So, tons and tons of accolades. He's authored numerous articles and publications, and he's actually created a software called TaxBot. So you can look him up. I would suggest if you are looking to save tons of money on your taxes, you definitely want to get this book, Lower Your Taxes Big Time. Now, the answer a couple questions. I just want to read some things that I found through his book that are very helpful. So what is he actually saying here? You and I are taxed at every turn. Most of the taxes we are paying are disguised as fees. So your auto license registration, toll booths, hunting and fishing license, cosmetology, insurance, medical licensing, building permits, and the list goes on. And what about your RVs, recreational vehicles? Tax when you buy, tax when you use them. It's not just federal tax. You also have state, county, city, tourism tax, personal tax, property tax. Are you feeling overtaxed yet? Believe me, I can go on for several more paragraphs just outlining all the ways that we're taxed. So roughly, he says in his book, 50% of every dollar that we spend actually goes to pay taxes. So a couple more. What about your car? You pay tax on it when you bought it. Taxes when you license it. Next time you put gas in your car, like at the pump, you'll see a sticker explaining the breakdown of all the state and federal taxes you pay. Are you tired of gas tax? 25% of what you're currently paying for fuel is tax. Conservatively speaking, just like you said, 50% of the gross income goes to some type of tax. This is why it's so important that you take every legal, honest, and ethical deduction that you have coming. So I'm not saying you cheat the government, but you need to understand what you can write off in order to be legal, ethical, and moral, but also get the massive amount that you can possibly get back on your taxes. So the tax benefits of operating a home-based business can be extremely lucrative. That was actually derived from Forbes. If you use your car or truck to go from home to a business location, your mileage from home and back becomes a tax-deductible expense from Huffington Post. And you can deduct all your travel expenses if your trip was entirely business-related. These expenses include the travel costs of getting to and from your business destination and any business-related expenses at your business destination. So I know as an accountant, we do continuing education, and so a lot of times the continuing education, they will put them on cruise ships or a destination that you want to go to. So a portion of that is actually written off on your taxes as a business expense for continuing education, including the travel, but you're also enjoying the vacation as well. So portion of that can be written off, and you need to speak with your accountant about all that information. So I hope this has helped you today. It's definitely not a detailed version of we could go into much more detail on things that you can write off and be an audit proof and things like that. But I wanted to just share with you, my experience of what home-based businesses have done for me and my clients in the past. I have seen anywhere between $4,000 and $30,000 a year in tax savings from having a home-based business. Now, the $30,000 was a huge client, he was paying a massive amount of taxes before. But here's the thing: if you understand that as a home-based business owner, the expenses that you have are not anywhere near as big as going out every single day and working. And then you have the advantages of being a small business, which the IRS actually benefits you, allows you the benefit of not having as many taxes, not having to pay as many taxes. And the reason why is because, hopefully you'll get bigger and bigger and bigger, create more jobs. And so, that makes our economy better. So that's why you're getting the benefits. So if you have any questions, here is my information. Here's my email. Here's my phone number. You're welcome to text me, call me. I do respond better to text. Honestly, if you're looking for an accountant, I am taking clients, but this was just meant for purposes of you understanding what could be done. And if you got questions, I would like to answer them. I appreciate your time, and have an amazing day.